Hey everybody, this is AJ with Trading Trainer. Do me a favor, and I know a lot of you guys have had a lot of webinars with me in the past. Do me a favor and raise your virtual hand if you can hear. Oh, wonderful. If you can hear my voice. I just want to make sure I'm broadcasting well. Listen, we're going to wait like about maybe 45 more seconds. I just want to make sure everybody gets on because I've got a special guest this evening. I've got Stephen Cawiezell, and he's actually a close friend and a peer of mine in this education space. And we jive a lot because we both really believe in planning out trades, that there's no magic to it. It's all about making, you know, you know, making the plan and then, you know, trading the plan and not
Plan your
deviating
trade, trade
from.
your plan.
That's it, right? Plan your trade and then trade your plan. He's all about, rules based, setting up all these rules. There's nothing magic. He does have, some tips that he's going to be giving us this evening about how to make things easier to see and to do, how to get from point A to point B without taking the scenic route. He's definitely somebody that I like to follow for guided discovery and doing things so that I'm not doing it with trial and error, how to shortcut things. But in the meantime, let's give it about maybe 15 more seconds, Stephen. How are you doing, by the way?
I'm doing great. I'm doing great. I've already had a soccer game for my son tonight. Go to the soccer fields, come back, do a little education. So I'm pumped up.
Nice, nice. Yeah, my wife and I just got back from our beach house. We were down in Myrtle Beach, South Carolina, which is where we have a home just south of Myrtle Beach in a place called Surfside Beach. We're back in Washington, D.C., and so that it's kind of a different vibe up here, as you can imagine.
Well,
Um,
it sounds different than Arkansas, where I'm at.
yeah,
Small working class town, Russellville, Arkansas. So it's a great
Russellville,
place. It's
Arkansas.
it's home. It's where I raised my family. It's where I grew up. But it's definitely a far cry from the beach.
Well, without further ado, Steven, if it's all right, I think that we've got probably, a good sampling of folks on the call. So I'm just going to hand it over to you. Everybody, please give your attention to Stephen Kowitzel. He's going to teach us some stuff, and let's learn together.
Yeah, hey, I definitely appreciate it, AJ, and it's been a pleasure. I've known AJ for a couple years now. We've done several shows together. I'm going to start being a regular on his YouTube channel, so that's great. I'm really excited about that. And I think you're right. We jive well together. We both love rules. You're going to hear the passion come out of my voice today when I talk about rules and planning your trade. So without further ado, just I want to thank everybody for being here today. This training session will probably take about an hour, maybe even a couple minutes less, and then we'll open it up for Q&A. So before we get started, I really just want to do everyone the courtesy of letting you know what I'm about to discuss and who I've built this for. Now, as the title suggests, I'm going to teach you how to build a weekly income stream. And yes, it literally takes 20 minutes per week once it's all set up. I treat trading like a business, and so do the majority of the people that I work with. So if growing your wealth and really crushing your retirement goals is truly important to you, then I've built this for you. Now, this process works, and in addition, I personally make sure that everybody who I work with knows how to execute them. So without further ado, please shut off all distractions. And in the next hour or so, I'm going to give you the strategy that serves as the foundation and key earner in my own business. Because make no mistake, if you're going to be truly successful, we've got to treat trading like a business. So before I get into some good stuff right here, let's just start with some disclosures. Got to make the lawyers happy. I'm going to let you read that for a few seconds. All right, lawyers are happy. So let's get into, one of my favorite statements from the man himself, Warren Buffett. We all know Warren Buffett. This quote, it says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Now, what is he really saying there? All he's saying is, I want to buy high quality stocks on a pullback. I want to buy high quality companies at a fair price. And it was really Charles Munger, his business partner, and it was probably around, late 60s, early 70s, where Charles Munger really, helped flip his mindset, because for a long time, and he was still doing very well, but he was buying mediocre companies really down in the gutter. So it was Charles Munger that said, "Hey, why don't we buy wonderful companies, at a fair price, instead of going down dumpster diving here?" And that's what we're going to talk about today. We're going to talk about some system and some rules so we can buy high quality companies on a pullback, you know, just like what Warren Buffett does, although it's not the same analysis, but that is really the premise of what I'm going to talk about today. Now, this is a chart of Zoom. You can see Zoom video up here. This is all the charts we're going to look at today are going to be weekly charts. So I want to repeat that. None of these are going to be daily charts. They're all going to be weekly charts, because this is a once per week setup. This is a weekly pattern. Now, it's interesting because a lot of times when a stock really takes off, and over here when Zoom started an IPO, like, people get really excited, so they just start buying, and a lot of times when the stock pulls back, they want to buy more, they want to buy on a pullback. Well, if you really do it with no rhyme or reason, you can kind of see down here that it eventually gets stopped out. And what I'm going to talk about today is a rules-based system, this 4-bar pattern, and it's going to pop up on charts that you're going to see over and over. And what's interesting is this 4-bar pattern popped up at the absolute bottom when Zoom was around $60 before it made its 10x move. It went from like 60 to 600. Now, I think we all know that most stocks aren't going to make a 10x move, right? I think that's what Peter Lynch calls it, a 10 bagger, and that's completely okay. They don't all have to be monster moves, but I like to show this example just to show you really how powerful this setup can be and how you can utilize it. And we're going to look at lots of setups, and we're going to go through lots of rules today. So this is Avis Budget, right? And this is just, I think the ticker is CAR, and we're looking for high quality stocks. We're looking for high quality trends on a pullback. And when I say high quality trends, most of us, I think when we're thinking of high quality, we want the exciting stocks, the tech stocks, right? Maybe the EV stocks, something that brings a level of excitement. But the reality is there's 10,000 stocks out there to trade in the US alone. And there are some very, very high quality trends and some high quality stocks that might not be on our radar. So I'm going to show you how to really identify this trend and identify this setup, like right before it takes off, because even though we don't think of as a car rental company being very exciting, that's a pretty exciting move on a stock right there. So you have a nice high quality trend, you have a pullback, right? It actually kind of gets pretty deep, and then you have this 4-bar pattern that just emerges at the absolute bottom, and then it tried to go up, and then it just emerged one more time. And it doesn't always happen like that, but then it made its big move. So this is what we're going to focus today, the rules right here of this 4-bar pattern. Again, this is a weekly chart, so kind of keep that in mind. We're not looking at daily charts, we're looking at weekly charts. I always like to talk about psychology a little bit. I know AJ does too, right? Because it's very important for us to have our mindset right. There's so many moving parts in the market. There's so much, fear, greed, and emotions. I was a former financial advisor, so a retirement planner. I worked with a lot of clients, sat across the table from them, and even now I work with a lot of customers, helping them build their trade plans. So I've had a lot of conversations, it's safe to say, and out of all the conversations that I've had, I have noticed usually that these investors or traders really fall into one of 3 stages. And I want you to think about this for a second as we're going through this, and maybe you can think about what stage that you're possibly in. I'm going to talk about how to break this cycle. So stage 1, this is usually where new traders start out. Maybe you're new to trading, or you can even possibly be new to a trading system, right? There's just a new factor out there, but a lot of newbies usually start in stage 1. So what happens when we start in stage 1? We usually are very excited, all right, because we see the numbers, everything looks great. I'm going to make a lot of money in the market, right? So it's just you got that, you're overly excited, you're overly confident. The problem with that emotion is when you're overly excited and overly confident, you can be easily influenced. Have you ever just said to yourself, I just got to buy something, the market's moving, I just got to buy? I think we've all said that to ourselves at some point in time. We all have. And when you're easily influenced, you're really quick to pull the trigger, and you're kind of lawless, right? You're not really following rules. You think you have a guideline in your head, but you don't have anything written down on paper. So you're just lawless. You're just buying whatever feels right. All right, you're trying to go in the right direction, but you have no real rules. Well, in the right market, that might work. Okay, but usually what happens when you're not really following a set of rules, eventually you hit your string of losses. Like, it's going to happen. You get knocked down a peg or two. So, and this can be confusing because you thought you had it figured out. Maybe you entered in just the right market. I know a lot of people that just started trading tech stocks in the summer of 2020, and thought they were geniuses, and then all of a sudden that gravy train ended, and then it just kind of knocked them back a little bit. Well, what happens when you get knocked down a peg or two, you usually move over to stage two. And that's where you're like, okay, Steven, I'm gonna brush myself off. And you're very determined because you made money, or you thought you had a plan, you thought you had a strategy. It didn't really work out the way you thought it would be. So now you're determined, but you're only semi-confident. You're not quite sure what to do. So what you tell yourself is, you know what? I'm going to learn everything about everything. I'm going to learn every candlestick, every indicator, everything I can find out there on the market. And that's honestly a dangerous place to be. And I see traders go on this information quest, right? Where they just want to be jack of all trades. And most people, even including me when I started out, like, most people are here in stage two for at least 2 years because they're still trying to find themselves. They're still trying to figure out, but they want to learn everything about everything. So they start to mix and match strategies, and eventually, hopefully soon enough, they come to the conclusion that all this knowledge you have in your head, all this years and all these hours and all this research actually didn't help you, right? You're not actually being consistent in the market. So then you move on to stage three, and now you're just lost, right? And I've been here, and you're lost. You don't have any confidence because you figure out that not learning every candlestick or every indicator, it doesn't give you the keys to the kingdom. So this is usually where you're home run seeking, or you're revenge trading, and that is a very dangerous place to be, because when you're revenge trading, you usually take above average risk. How many times have you said to yourself, I just have to get back to even? That's the worst thing you can say, because I've had customers, new customers that come to me, and they're like, Steven, what I've been doing the last several years isn't working. I've significantly underperformed. Can you just give me a double or triple so I can get back to break even? And I just kind of chuckle, as if that's an easy thing to do. But when you have that mentality, you take above average risk, and if it doesn't work out perfectly, which in the market most of the time it doesn't, then you're really, going to be in a pickle. So you're stuck in the stage three for a little bit until something else comes along, right? Maybe a new system, new process, something, right? You're excited again, and the vicious cycle starts all over. So I'll pause and ask the audience, or ask anybody, and you can just type in the chat box or the question box, what stage are you in? Right? Because most everybody, including myself, have been in all of these stages at some point in time, right? It's just a matter of, can you figure things out so you can break this cycle and be consistent in the market? And I think that's okay. So that's what we're going to talk about now. With all the conversations I've had, what I have really found, and I'm getting some stage twos, and I definitely that's where a lot of people are. Okay, they're in the stage two. But what I have found is it's not knowing everything about the market. It's the biggest hurdle traders go through is they don't have an objective rules-based system, right? They don't have an objective trade plan, something that's written down, something that's real, because it's not real until you write it down. So when I say an objective rules-based system, I'm saying a system that tells you, what signals to buy, a system that has money management rules, when to get in, when to get out, no discretion, and a system that tells you how much, right? How much should I put in? How much should I risk? So you really have three pillars. You got the signal, you got the trade management, and you got the risk management. You have to have all three. If you're missing one, that could be 100% be the difference between, getting to a consistent income level. Okay. So I found is most people do not have this written down rules-based system or rules-based trade plan. A lot of people, they have some general ideas, they have a general strategy of what they're trying to do. The problem is if it's in your head, right, you can kind of find ways to just tweak it a little bit based on market environment. And that makes it tough, because then if you're always tweaking, you're always saying I know more than the market. But it's just so easy and so stress free if you don't have to think about that stuff. If everything is decided for you, that you just follow the rules. All you have to do is follow the rules and execute, and you're going to be in a good place. So my big promise to you today is I'm going to teach you an objective rules-based trade plan. I'm going to give you the money management rules on when I get in and when I get out. We're going to look at some real live examples, and I'm going to show you how to trade this whole system in only 20 minutes per week. And I know that's a big promise, but I'm going to deliver on it. If you pay attention, you take some notes. I'll tell you really when you want to pull your notepad out is here very shortly. A little bit about me, just so you know who is talking, so you know who is on the other end of the screen. This is me, Stephen Cawiezell. Live in the working class town of Russellville, Arkansas, where I've lived most of my whole life. I have a wife and two kids. I am a former financial advisor turned trader publisher. When I was a financial advisor, I worked in a practice with 60 million assets under management. I'm the author of Expert Trading Systems, which you can purchase on Amazon. I'm the co-founder of thetradersplan.com. What am most proud of, and what I enjoy doing most, is I have helped many traders set up a rules-based system and set up a rules-based trade plan. So I really went from writing retirement plans for retirees to writing trade plans for retirees. So I've been doing this for a long time. Now, what makes this easy? Now, I'm going to teach you some, but what makes this easy? Because I believe in simplicity. That makes it easier for all of us. For one, what I'm going to teach you is there is zero fundamental analysis involved. No CEO change, no sales, return on equity. We're not doing any of that. We're just focusing on the price and the volume. Okay. There are 3 rules that you could literally write on a Post-it note. I challenge absolutely anybody who's sitting at a desk, if you got a sticky pad, pull it out. And I'm going to give you the 3 rules. You can write it on a Post-it note and you can stick it to your computer screen. And it only takes 20 minutes per week. That is by design. I do not want to stare at a screen all day, right? I want to place my trades and go fishing, go golfing, go do what it is I love doing. And I want that for the people I work with too. If you're interested in staring at a screen all day, right, this isn't for you, because I found that the more you stare at a screen, the more you want to tinker. It's the more you want to do something, the more you want to buy and sell and do all this, and it's the sitting that makes the money, as Jesse Livermore says. So this is a once per week setup. When studying the bottoms in stocks, I noticed that there are certain qualities that these stocks have really before they turn into winning trades. Now, in order to identify this money-making setup, we have to recognize these qualities before they make their big moves, and I've narrowed down these qualities into a rules-based winning system that I'm about to share with you. Now, let's look at the schedule, right? Just so you can visualize how this all works. I spend, and the people I work with, we spend 15 minutes on the weekend, going through the scan to find the best setup. I'm talking, I'll put on a cup of coffee, I'll go to my computer, I'll click run scan, I'll spend 15 minutes going through it. Maybe a cup of coffee, maybe a pot of coffee, whatever you like. All right, on Monday morning, I am placing my trade at the market. I'm just buying at the market. I've done my homework, I'm buying at the market. I'm not trying to add discretion and say, well, I'm going to put this limit order and that limit order. No, I'm getting in. I'm looking at the pre-market. If it looks fine, I'm getting in. So 15 minutes to run a scan, tops. That's tops. You can probably do it in 7 minutes after a couple run-throughs. 20 minutes, 5 minutes to place your order. 20 minutes total, and just rinse and repeat, right? Put that alarm on your cell phone every Sunday and Monday to do it again. It is incredibly easy. So if you have that sticky pad out, now is the time to write down on it. We're gonna go over the rules. And I told you these rules, you could literally write it on a Post-it note. You can see right here, 1, 2, 3 rules. So we're gonna look at like our classic example. We're gonna look at CrowdStrike. We're gonna look at a weekly chart. I'm gonna go through each rule one by one. I'm gonna explain to you the rules so you completely understand. I'm also gonna explain the psychology, like what is really going on behind the rule. That way you can fully understand and you are much more confident in executing this system and executing a trade. So let's get started. Rule number 1, weekly chart must undercut the prior 3 weeks. So this is a pullback strategy. So we're looking for a swing low, right? Once we kind of see a reversal bar, this is a reversal bar, okay? This weekly chart must undercut the prior 3 weeks. That means this low down here must be lower than any point in the previous 3 weeks. 1, 2, 3, check. Now, why do I do that? What's the logic behind that? Well, how many times have you, let's say, bought on a pullback? Let's say you bought right here, you get stopped out right here, only for the bar to stop you out and reverse and go in the intended direction, right? It happens, and especially happens if you use stop losses, which I hope you do. Well, the market tends to frustrate us and go the other way. So I like it when the market shakes out somebody else. So if the market tends to frustrate us and go in the intended direction, why not buy after somebody else is already frustrated? Why not buy after somebody else's stops already gets picked off? And then so you flush out the weak holders, the big boys step in, right? And that's rule number 1. And then it goes in the intended direction. So rule number 1, weekly chart must undercut the prior 3 weeks. 1, 2, 3, check. Rule number 2, this reversal bar must finish positive, okay? So that means that, and must close above the previous week's close. So that means you can see right here, this is where this bar closed, this is where this bar closed or opened, and this is where it closed. So that means this close has to be higher than this close. It just has to finish positive and close above the previous week's close. It doesn't have to close above the previous week's high. It does not have to close above the previous 3 weeks high. It does not have to be engulfing. All I want it to do is close above the previous week's close. I just want it to be green. And what's important behind that? Well, what's the rules behind that? Well, like we do all these little things in the market when we put rules in place. We want all these little rules to give us an edge. Okay, just like if you're a casino and you're a blackjack dealer, you have an edge. It might be a small edge, but you play enough hands, you're going to be the house. So as traders, we need to look at it the same way. We need to have enough edges where if we play enough hands, we are the house. We're going to be consistent. We're gonna make some money. So you know, I'm looking for the bulls to be in charge. I want that reversal bar. I don't want it to finish down, you know, start right here and finish it right here, start right here and finish down here. No, that means the bulls are in charge. I want there to be enough buying pressure in that weekly bar to show me that enough buyers are stepping in to at least put it positive. Now, let's look at an example that it didn't finish higher right here. So you have a pullback strategy right here. Look at these 4 bars. You can see them. And you can see this right here opened right here. And it tried to reverse, but it couldn't close above the previous week's close, right? The bears were still in charge and it failed. So it fulfilled rule number 1. It did not fulfill rule number 2. No reversal, no green. It failed. And then the next one came in and that one was the winner. Okay, so we're looking for that extra confirmation. Rule number 3, and this is an important one. Must have, they're all important. They all have to be in play. Must have above average volume. And this is very, very simple. So this is a volume histogram down here. Every charting platform out there has a volume histogram. Like you don't need anything special. All charting platforms have it. You need these volume bars. So I define above average is above the 50 period moving average. You can see over here, I plot a 50 period moving average. If it's above the line, it's above average. If it's below the line, it's below average. It's really that simple. Now, if you can see there's no blue line over here because this was an IPO and there weren't 50 periods to average yet, which is why it kind of starts in the middle of a bar. However, you can clearly see that this bar is a way above average, way above these. It's way above these. It's above average. Now, why is that rule so important? Well, this also gives us an edge because not only do I want the bulls to show they're in charge with the price action, I want the bulls to commit with their dollars as well. When you see a volume bar like this or a volume bar like this, that is not retail traders like you and I. That is the institutions, that's the pensions, the hedge funds, the mutual funds piling in. And I love to see that kind of volume because it tells me one of two things are happening. Either one thing is happening, let's say an institution, they say, okay, CrowdStrike falls below 60, I'm gonna buy everything below 60. I'm gonna buy as much as I can, right? And shoots the price back up. Well, that's good because we have a big player in the market that is supporting the stock. That's good for us, right? Because they're gonna keep buying at a certain level, or it's probably a couple people buying at a certain level, a couple big players. Number two is even better. It's when an institution takes a new position. So why that's important is because if you have a new institution that take a position, they usually have to buy 500 million, 250 million, or even a billion of one stock just to make it a small percent of their portfolio. So they have to buy such a large amount. And what's interesting is they can't buy all in the same day. Because I mean, if you could imagine buying $500 million of a stock in the same day, it would double the price of the stock. So they can't do that. So they have to incrementally get in. So when you see this kind of volume, you know that either institutions are supporting their stock or new institutions are taking a brand new position, which is even better because on average, it takes a mutual fund 3 to 6 months from their initial position to fulfill it, right? Because they can't buy it all in one day. So when we see this kind of volume, you and I, retail traders, we have a huge advantage because they have to pile in and they have to pile in incrementally. We don't. We can get in and out within seconds. So when we see this kind of volume, when we see this kind of pattern, we know the institutions are piling in. We can just hop on the bandwagon and ride their coattail all the way up until the trend is over. So we have a very big advantage over them and they do not. So we're going to play that to our advantage. That's our edge in this pattern. So let's go back through the rules one more time. Here are the 3 rules, okay? So we'll go through them one by one, just kind of review them, and then we're going to look at some more examples. So the weekly chart must undercut the prior 3 weeks. There you got this low down here, the bottom of this candle has to be lower than any point in the previous 3 weeks. 1, 2, 3, check. And by the way, these 3 bars do not have to be in sequential order, meaning this one does not have to be lower than this one does not have to be lower than this one. It could be these 3. It doesn't matter, okay? Just as long as the low of the reversal bar undercuts them all, okay? Rule number 2, must finish positive and must close above the previous week's close. I want institutions to at least show their support in the stock to make sure that they are in charge. And then rule number 3, I want them to not just show they were in charge with the price action on rule number 2, I want them voting with their dollars because they cannot get in and out like I can. That shows me that there is multiple big players stepping in and supporting the stock. And it is highly unlikely that someone is going to take a $500 million position in a single stock and turn around and sell it the next week. Okay, so that gives us an advantage to hop on the bandwagon and ride the coattail all the way up. So let's look at some other examples. This is Washington Federal. Now, earlier in the training session, I talked about it doesn't have to be an exciting name. As a matter of fact, I think it's funny when it's not. Every single year, it never fails. My biggest winner is rarely a stock that is a top Dow 30 stock or NASDAQ stock or bank stock. It's usually something that I've never heard of, and that's good. So when we run a scanner, so this is Washington Federal, some bank I've never heard of, maybe you have, but it showed up on the scanner so many times. So we're looking for high quality trends, right? You got the breakout right here, you got the gap, it broke out of this downtrend, and then the high quality trend starts. Then you got to pull back, it reversed, it undercut the previous 3 weeks, right? And then you got a trade. Okay, so you enter and then you make some good money on this trade. And as it starts to break down, as it starts to break below the moving average, you get out. But what's interesting is sometimes when you get out, you can get right back in. So on this one, you make a little bit of money, and then there's a much deeper pullback. So this actually looks like an inverse head and shoulder, but at the bottom of this whole move, you got a really, really nice trend. The stock went from 20 to 34 before it started to consolidate. At the bottom of this whole move is this reversal pattern right here. So you enter, right? It goes up, right? And then you have another one right here. This one lost because you can see you got another pattern right there. It broke down a little bit further, but look, you had another one right there. And then this one was a big winner. So 4 out of 5 winners on this one. I have no problem if I get stopped out of a stock. I have no problem getting back in if the pattern still looks good. All right, you have to have short memory, but this pattern is abundant, and I challenge anybody, grab your watch list. After this training session, maybe tomorrow, just start looking at your watch list and go pull up the weekly chart. Remember, we're looking at the weekly chart, and you're going to see this start to pop out at the screen. Just throw up any chart. You'll probably see 2 or 3 on every chart if you go back a couple years. Okay, this was Matson. This was a really good trade. This is actually a trade we took, and I think it got stopped out last week, but still is a very, very nice trade. And I like showing this because, not all patterns look textbook, right? But this is a big bull bar right here. It fulfilled all the rules. We got in and it shot straight up, and it did very, very nicely for us. And you talk about a stock, that I was unfamiliar with. Matson was one of them. And it's important to not have any bias towards certain stocks, because if you do, then you're going to miss some phenomenal winners out there. This is Hess Corp right here, and you can see this was also one we played, and you can see right here that you got one right here, worked out pretty good, and then you had another one right here. You get the big bull bar, you get the trend start, and then you had another oil stock. Now I actually want to go back to this stock for a second. Go back to the first example that we looked at, Washington Federal. This was in, I think, the fourth quarter of last year. And what's interesting is when you run this scanner, you'll start to find, like, this was in the middle of a correction. This started to break out when the overall major indices were still in a sideways consolidation. So this pattern, this can really be a leading indicator, to tell you what industries are popping, what stocks are breaking out, what are some of the strongest names out there. And when you run a scanner and it has multiple stocks from the same industry, that's when you really have a lot of conviction, because you know that a lot of stocks go together. They go in sympathy. So this happened. This was breaking out in the middle of a correction. Bank stocks were, and it was a leading indicator. So that's why I like to look at it. So here's some money management rules, and this is what I use, and I put these rules through the ringers, and this is what my customers use too. And because it's very, very easy. You can see everything I've taught so far. Very easy pattern to understand. It's a pullback strategy. We have the money management rules. Very simple to understand. We're buying at the open on Monday. I'm not nickel and diming. I'm buying at the open on Monday, and I'm selling half at 8%. Okay, I'm going to sell, that's going to be my target one. So I'm going to sell half at 8%. And once I hit that target one, I'm going to raise my stop loss to break even on the remaining shares, and I'm going to let the rest run until it breaks the 50-day moving average. Okay, so once you hit your target one, we do move to the daily on this. Stop loss max 10%. So let's think about an example for a second. Simple math. So I'm buying Apple at 100. I have a stop loss on all my shares at $90, because we always use stop losses, and I have a target one of 108. So when my $100 stock goes to 108, I'm selling half. I'm taking my other half that I have a stop loss still at 90, and I'm raising that stop loss to break even, which is my $100 mark. All right, so that way, if the stock hits my 108 target and rolls back over at $100, I just netted 4% on a trade. And I can, you do that once a week, you'll be just fine. So, you sell half at 8, you sell half at 0, that nets 4. Or, when I want to have a rule to allow profit maximization, because some stocks, they just want to keep running, right? Like a CrowdStrike, like some of these other examples that we looked at. And I want to take advantage of that. So I'm going to let it run until it breaks the 50-day moving average. And it's really just that easy. And I believe that the easier, simple enough for beginners, powerful enough for professionals. I believe in simplicity because that's easy to execute. We don't overthink it. We don't overcomplicate, right? We're not trying to know everything about everything. We're just trying to put a plan in place. Now, can you do this? All right. Can you see yourself doing this? I should ask, can you see yourself doing this? I know you're capable of doing this, but honestly, my biggest transformations as a trade coach was just making the strategy simple enough, that the average or even beginner trader would be able to replicate these steps week in, week out. I know it's simple, but it works. And, my students that repeat these steps, they're all going to be better off than they were before. And I really want that for you. I understand that everybody wants to hit home runs, but if you can't keep your eye on the ball, nothing is going out of the park. It's just not happening. It's that simple. So if you can commit 20 minutes per week to the process, you can really change your retirement, and you'll very likely, make your life better, more comfortable, make, the people around you's lives better. And it's that simple. So market timing, what's interesting about this pattern is that you can easily use it on all the major indices as well as a great market timing tool. Let's look at some bear markets. So I think this is the S&P 500 weekly chart. I think we all remember March of 2020, right? It started to break down mid-March or mid-February to mid-March. Look at what happened at the absolute bottom. At the absolute bottom of the worst sell-off that we've probably all lived through. That's right here. Okay, so you have a reversal pattern, fulfills all the rules and undercut the previous 3 weeks, closed above the previous week and above average volume. Enter at the open on Monday. You follow a set of rules. And it's funny, the rest of 2020 was an amazing year, which is crazy to think. And I used 2020 as my favorite case study. And I know this is a chart of the S&P 500, but in the summer of 2020, the NASDAQ had its greatest rally since the tech bubble of 1999. It had its greatest rally in 21 years in the middle of a COVID-filled recession. Let that sink in for a second, because tech stocks were just booming and we were in a recession. Half the country was shut down. There was really nothing good on the news. But if you follow the rules, you follow the charts, we actually did very, very well on tech stocks. And I'll be the first to admit, when the market was approaching the February highs in the summer of 2020, I thought it was going to roll back over. I was surprised it ran that long, and everybody I talked to thought it was going to, take that double dip, that double leg down, but it didn't. It didn't. And I'm glad I didn't listen to my opinions, because that's all it was an opinion, right? The people on TV were just talking. They were giving opinions. The only thing that matters is the rules. The only thing that matters is what is on the chart in front of you. And it's pretty amazing case study if you think about it. So let's look at the bear market of 2018. There was also a bear market of 2018. There wasn't a reversal on the S&P 500, but there was on the NASDAQ 100, the QQQ. You can see right here, look, you have a 20% pretty rough quarter, 3 months straight down, and then you get that reversal. In 2019 was a crazy year. And I know right now we're really in, a choppy environment, but we're looking at some charts, and I hope one thing that stands out to you is amazing trends come out of ugly markets. And it's if you have an opinion that's too strong on what the market should do, and you're telling, people don't talk about good news on TV. That doesn't keep us watching. They talk about bad news. If you're too focused on the bad news, and that makes you have a negative opinion about the market, and you really, really could miss a great, great rally. So it's important you can watch the news, and don't get me wrong, I watch the news, but I follow the rules. And if the rules tells me to get in, I'm going to trade those rules no matter what, and we'll just let the market be my guide. So there actually wasn't a reversal at the bottom in 2009, but there a reversal on the Nasdaq in the bottom of 2002. Was a crazy bear market. The tech bubble popped. The Nasdaq dropped 75% approximately over a 2.5 year span, and then you get this reversal bar right here at the absolute bottom, And if you had bought it, you'd have made some money, and then it would have started to fall back, right? Not every signal goes to the absolute moon, but look, if you would have followed the rules, you probably would have got out somewhere around here. But then look at this whole pullback right here that lasted a few more months. There is another pattern that emerged. You can see it right there. And then it just absolutely took off. The NASDAQ just really, I mean, moonshotted for the whole 2003. And again, if you were really just kind of paying attention to the news, all the negative talks, and I understand that there's not much positive stuff going on right now, or really ever. But again, it's if you focus on that, you really could miss some things. And I preface that with this. This is the current market. I took this snapshot today. Look at where we are at, and that excites me. Does that mean it's going to go to the moon? No, I'm not saying that. But I mean, I just looked at 3 of the last 4 bear markets, and they all had this pattern that's showing up this week. Now, this is an end of week pattern, which means it has to close, it has to hold tomorrow. If it doesn't, the pattern, it doesn't fulfill all the rules. It still has to close above last week's close, but the volume's already there. It undercut the previous 3 weeks. And what's interesting is this reversal pattern right here is still in play. This reversal pattern right here is still in play, or right, it hasn't been undercut. So right now, everyone's really negative, and we have a reversal pattern right here that hasn't been taken out on the S&P 500, and we got a reversal pattern right here back to back. So I talk about not being negative. This is not just focusing so much on the news right now. You got everything going on. Focus on the chart right here, and if this chart holds, this chart's telling me something that it could be a pretty good opportunity to take some of these reversal trades. Okay, so interesting setup, interesting development this week. It's a very strong day in the market, and I shot this up. It does need to hold, right? I'm not buying before the end of the week. I'm buying on Monday, but it's pretty interesting. So last year, I've been trading this pattern for 3.5 years approximately. Last year, I made a tweak to update the scan codes to just make it a little bit better. Every now and then, I try to look at something and say, can I make this just a little bit better? And I did that. And these are the results of the updated scan codes. Now, over the last 5 years, we've identified 562 high quality trades, right? The rules did. Now, over the 5 years, we've had some bear markets. I have a bear market in the NASDAQ this year. We had one in 2020, and we had one in 2018. So there were plenty of negative times in the last 5 years, and yet the system still performed at a 71.5% win ratio. That's pretty dang good. Now, these are backtest results, and that doesn't guarantee that the next 5 years are going to have a 71.5% win ratio. Could be a little better, could be a little worse, but historically, we are right in that range, and it's done pretty well. So the average trade length is about 43 days. Okay, I want the trade to last longer because that means my stock is running, and it's running far, and I like that because that means I'm doing well. Now, so the average trade lasts about 43 days. Now, you could buy 1 or even 2 a week. The average trade makes 2.38%, right? That's all the wins minus all the losses divided by the number of trades, okay, 562. So on average, every trade is over a reasonable number of trades is averaging 2.38%. You do that on a weekly basis. You buy 2 per week. Maybe you put 10,000 per trade. In a couple of weeks, that'd be $467 per week. Maybe you're not putting in $10,000 per trade. Maybe it's 5 or maybe it's 1. It really honestly doesn't matter. The most important thing is that you follow a sound rules-based system for whatever amount you're trading, and you be consistent, and you'll do just fine. You'll do just fine. So You can really hear the passion in my voice. I talked about rules a lot. I say that word a lot just because I love it. Rules-based systems, they really take the emotions out of trading, and they're designed to give you more freedom. I talk about, 20 minutes per week, 15 minutes on Sunday, 5 minutes on Monday. Go fishing, go golfing, go spend time with family, go to work, go do something else. Uh, Staring at a screen is not going to make your stock go up any further. I want that time back. The smart money uses rules-based systems because they work. I've read that approximately 80% of all volume on the New York Stock Exchange is automated trading systems. And that's kind of amazing if you think about it, how far we've came over the last 30, 40 years. They use rules-based systems because they work. You're taking the human error element out of the equation. You're taking that fear and greed out of the equation, and you're just having automation take over. Okay? Keeping drawdowns limited, and I think that's incredibly important because most of the people I work with are either approaching retirement or they are of retirement age. So I think it's so important that you protect what you've worked so hard for your entire life, right? And now, I'm not saying that you can, protect yourself on, every little, 3% pullback, right? I'm talking like let's make sure we protect your nest egg so you don't have a big drawdown. Okay, rules-based systems also allow trading to be a business and not a hobby. And when I say business, I really mean a plan. Every business out there, whether a brick and mortar or an online business, they have a plan. They have a marketing plan. They have a plan for how they're going to deliver to their customers. Right? They have a customer service plan. Like, they have plans. They execute them. And when you have a plan, that makes it real. And when you have a plan, it allows it to be a business and not a hobby. And I think that's incredibly important to get out of the entertainment mode and get into the consistent making money mode, because that's where we all want to get. But you got to get out of hobby mode first, and you got to follow a set of rules to do that. So everything I've talked about, I've taught you a lot, right? We have talked about the pattern itself, like how to execute it. I gave you the 3 rules. I gave you the 3 money management rules. Now, and you can really take this and absolutely run with it. And right now, you really might be wondering if this is going to change your life and improve your retirement that much, enough to make it worth it. And remember, I built retirement plans professionally. I understand and know the fears and the desires that come with retirement because I heard it every day. I heard it every day for years, and I still hear it. So I built this so you can grow your nest egg and your income, no matter how big or how small it is. That doesn't matter. We're going to grow it together, and it's going to make life easier for you and your family. My twin brother and I, we run this company, and we answer every email, and then I guarantee that we do. So if you're ready, I'm ready, and I want to show you what it looks like. If you want to take this to the next level and you want to come work with me, I'll show you what that looks like. So right now, I'm offering the complete weekly income system package, right? So what we just talked about, there's only so much I can fit in a single training session, in a single hour. There's some more advanced strategies as far as position sizing, as far as how to use the scanner and how to really narrow that down. So I talk about this in this full weekly income system course. Very easy to execute, 20 minutes per week. It's really designed for the person who does not want to stare at their screen all day, want to grow their retirement income. Now, I want to teach you how to fish, right? I want to teach you, the spot, the lure, the bait, absolutely everything. But, that way you really own it. You have it. But, it's also important while you're learning that, I want to send you the alerts as well. That way, when you run the scanner, we can get the exact same stock. And that's important to me. So not only will you get the complete system, I'm going to give you the real-time alerts and 12 months worth of real-time alerts. And I deliver these alerts before the market opens on Monday. That way, before the market opens on Monday, you have your game plan with very specific targets and stop losses. It's a lot more detailed than this. This is just an example, but that way there is no question on what you need to do and how you need to execute it, okay? So a lot of people, I haven't talked about options yet, but a lot of people say, Steven, do you trade options? And the answer is yes, we do trade options, and we do have an options program that goes along with this. Now, the rules are actually pretty similar. We take the system, right, and then we follow some rules to trade options with it. The money management rules are pretty similar. You know, we're going to sell one contract in the strength and we're going to let the rest run. So I have some individual traders that they might enter the stock and they might enter the option. They might trade both, right? It's really up to them and whichever they want to do. So I have this full weekly reversal options course to really show you how to do that. That way, when I send the alert out, you can just say, I know exactly what option I'm going to go get, and then you can trade the option version. All right, so you got the stock version, you get the option version as well. Now, as a bonus, every Tuesday morning, so you got your Monday morning game plan, you got your Monday morning trade, you know exactly what you're doing, you execute that at the open. Some people want to trade more. So every Tuesday morning, I'll send out a video before the market opens. Really, this is my top 5 of the week. So these are more discretionary, aggressive ideas. So let's say if you're looking, you know, you want to know what's on my watch list, you want to know what's on the top of my watch list. I send out my top 5 every Tuesday morning. That way you can look at them throughout the week, see which ones you want to execute. These are more aggressive trades. So this is a snapshot of an email that I sent on Riot before it made its big move. And I said right here, it's a beautiful cup with handle pattern with a potential buy above $4. You can see right here the cup with handle. It broke out the very next day after I sent this email and I bought it. And I didn't know it was going to go from $4 to $70. That's not a typical result, but that's just amazing to me. And that just shows you, you don't know which one is going to be your big winner. You have no idea. You take the trade, you follow the rules, and you let that be your guide. So we do play some more aggressive stocks on this list. Okay. And I know that AJ is an awesome guy too, and he's a great options trader, and we have option income alerts as well. This is for the first 20 members. So not only do I show you how to trade options on the actual stock side, but I have we send out option income alerts, and this is a long short strategy. So we'll do debit spreads, credit spreads. We'll do just straight directional trades, calls or puts on different stocks. So we launched this service actually last year, about 8 months ago, and so far year to date we're up 41%, and that's only if you would have traded one contract. So this service has done pretty well, and very excited about it. And I'm going to throw in these option alerts to go along with the weekly income system. So far, everything we talked about, I want to map this out for you. You got the weekly income trading system course, plus the alerts for 12 months. I should have wrote 12 months, plus the alerts for 12 months. You get my swing trade setups blueprint that goes out every Tuesday, and you get the option income alerts. So you really have 2 alert services that are complementing each other very, very nicely. In addition, and this is incredibly important, I worked very, very hard, spent a lot of time and money last year to improve the scan codes and make them even better. But I have scan codes for stock charts and Thinkorswim. Very easy to execute. If you don't use either of these platforms, that's no big deal. I'll give you the scan codes anyways. A lot of people take it and they'll build a scanner on their own platform. So the code is very, very easy. But you talk about waking up and pressing a button, and then you have opportunity. And the interesting thing is the opportunity is abundant. It's crazy how often this pattern pops up on a weekly basis. Usually the scanner will run anywhere from maybe 5 per week to 90. And I show you exactly which one to buy. So that way there is no discretion, there is no second guessing, very easy. I'm gonna take this one, and that's the one we take, okay? So very easy rules to follow. Now, last year, at the beginning of last year, I launched, what I call my fast track weekly income workshop. And I have these every couple months, and I've really just had phenomenal feedback. I know sometimes we enter a system or a program, there's a lot of moving parts, maybe videos, and then we really say, now what? Like, what am I supposed to do? I host this live workshop to really do that hand holding. You can look over my shoulder. I'm going through the motion, I'm going through the scanners, and I let you ask questions until you're blue in the face. So I want to make sure, I mean, this is a workshop that is taught by me. This is a 2-day live workshop. And the goal is to really go from newbie to mastery in 30 days. I really want to accelerate this plan for you. And I do that by giving you a little extra hand holding this workshop. And I do keep these classes small, and I keep them small for a reason. I want everybody to ask questions, and I want everybody to feel comfortable asking questions. And so I do keep these live, but I added this bonus on here, and that's unlimited attendances for life as long as you're a member. So if you can't make this workshop, or you like this workshop and you want to catch the next one too, that's totally fine. As long as you're a member, you can attend as many of these as you want, no additional charge. So this is a bonus I have added, and I've really received phenomenal feedback on it. So everything we've talked about so far, I just added the fast track workshop and the custom scan codes. So huge value for this plan. You know, I mean, if all this did was really just give you that additional retirement income, whatever that amount is to you, would that be worth it? Or what if it just financed a few trips on your bucket list? I like to travel. My wife and I love to travel. What if it would just really take away the stress of deciding which stocks to buy and when to buy them? Right? The market's moving fast. I don't know what to buy. I don't know when to get in. I don't know when to get out. I'm just not sure. Right? Sometimes it's enough to really make our head foggy. All right. This whole process and this whole system really makes it decided for you. So you can get the completely weekly income system, absolutely everything we talked about for $497. Right, you get everything. You can go to thetradersplan.com. That is a secure order form. Thetradersplan.com/trading trainer. Right there. That's a secure order form. And I'm going to sit here and answer questions. I got a few more slides to go through. I'm going to open it up for FAQ in a couple minutes when I'm done. But I also have my contact information, direct contact information on the order form. So I'd invite you to go check out the order form. You got my office number, you got my email address, my direct email address. That way, if you have any questions, I am very reachable. You can reach me directly. So
Hey,
here's my
Stephen,
two-part.
can I jump in
Yeah, go
really quick?
ahead.
I
Yeah.
gotta just say, one thing that as I was sitting through this presentation, one thing that is really, and I emphasize this every time I speak, and you just are, it's about the pattern, right? You identify a particular pattern and then you trade it accordingly, whether it's going long or short stocks or whether you're going to throw some options in there. You're not trying to fit some sort of trading strategy to whatever the market's giving you. You're actually identifying, and you gave us a good pattern, and you've got other patterns that you're talking about. I just want to emphasize that for everybody. You don't try to trade just anything, right? I had somebody reaching out to me today trying to fit a pattern to a very popular stock, Facebook, and they were like taking our patterns and manipulating them and saying, "Isn't this fitting?" And I'm like, No. You're so eager to trade Facebook and it's just not meeting any of our patterns. Instead, do like Steven's saying and just look through this list of stocks for the pattern that is tradable and then trade it appropriately, right? You got anything to say about that?
Yeah, absolutely. It's so easy. Like it's human nature. We want to see what we want to see, right? And sometimes it almost seems foreign to say, well, I got all these rules, I got this system that makes all these decisions for me, and it goes against human nature. But yes, we're not trying to force anything, right? We're not trying to, like, say, force a pattern on Facebook or anything like that. You know, I want the stocks that are fitting this very specific set of rules. I don't care what they are. And I have a way to narrow down that list so I know exactly which one I'm buying. And it's just, I mean, it's stress free. It really is. I don't have to think about it. I don't have to do anything. I don't have to
It's
stare at a
rules
screen
based.
like, what's that? It's rules
It's
based.
rules based. Yep.
Absolutely, absolutely. So, yep, no, you hit it really spot on, AJ. I appreciate that. So to continue, you know, I understand that the market is shaky right now, although I'm very excited about, I showed you that, you know, right now, this week, we're currently in a reversal and we still have a live reversal. So I talked about, even though there's negative news out there, like the pattern is emerging. So don't have a negative attitude about it because you don't want to miss it. But here's my two-part guarantee. Trade it for 30 days, and if it's not for you, just send me an email and request a full refund. The only thing that I ask is you have to prove that you've taken one trade. So you have to send me a screenshot, tell me you've taken one trade, and no harm, no foul, right? I understand most people don't want their money back. They want to find consistency. They want to mentor. I have worked with mentors. I still work with mentors. I think it's very, very important to work with people that are doing it, something you want to do. So here's my other guarantee. If you haven't made money in 90 days, I'll personally mentor you until you do. That's not somebody that works for me. That's not my customer service agent or anything like that. That is me. Like I will say, hey, you send me an email at 90 days, and if you haven't made money, I'll say, hey, send me your trade log. Let's hop on Zoom. Let's look at this and let's see how we can straighten this out. If this happens, which it doesn't really happen that often, but most of the times I find that someone is kind of going off and doing their own thing. So we just have to make some slight adjustments, bring them back to the rules, and really set them on their way. So here is everything that's included, and I don't have my contact information on this. It is on the order form, so you can check that out. The weekly income trading system plus alerts. We got the weekly income options course to show you how to trade options with it. You got the swing trade setups blueprint that goes out on Tuesday. You got the option incomes alerts and the workshop and the custom scan codes. If the income alerts and the workshop is important to you, I do have to keep these small. Like I have to keep this class small. It's only available for the first 20, so go ahead and take advantage of that. But that is really the my presentation. I think I kept it at an hour, so I'll really open this up to Q&A at this time and see.
Stephen, I went
Um,
ahead in the chat section. So for all of you guys, Stephen's really put together a nice package. And I have to be honest, I saw Stephen give this very similar presentation. And I have to tell you, he's giving you a deal because the presentation I saw him give to a very large group of people was for double the value. So you want to take advantage, or double the cost, I should say. You want
Absolutely.
to you want to take advantage of this deal before he pulls it down because he's literally giving my group, the folks on this line, pretty much a 50% discount. I want you to know that on your webinar control panel, and if you've collapsed it because you wanted to free up valuable screen real estate, press that orange button with the white arrow key so it comes back out. You'll see the chat area. I went ahead and put that link that he's been talking about
Yeah,
so you
I
don't
see
have
that.
to worry about typing it in correctly. You could just click right on it and it'll bring open this order form. And you can see, for instance, there's all the contact information on how you can email him, call him if you have any questions, or if you're ready to order, just do it right then and there. And I'll
No,
be quiet here while you answer some questions.
no, that's okay. So Okay, so I do have a question. Someone says I'm already a member, but not sure if I get the option income alerts. Why don't you send me an email directly and I'll take a look at your plan. And if we need to add that, then you can purchase that. So to answer that. I get a lot of questions. I'll just kind of go through, some really common questions I get. And, one of them is, can I flip this upside down and go short? I am working on some short scan codes at the moment. But the reality is, and it works, but the reality is most of the time you're going to make more money going long because the market does have a long-term upward bias. So I also get another question that, do I have daily scan codes? And the answer is yes, I do. I do have a daily scanner as well on top of the weekly. I will tell you that the weekly scanner will give you plenty of opportunities. So if you're looking for more opportunities, you can just look on the weekly, but I do have a daily scanner that works as well. I haven't tested that as well as I have the weekly though. So those are really some of the common questions. Can
I
you
got to
just
say as well, having looked at the market for as many years as I do, the whole short patterns, you cannot, and folks know this, you cannot just reverse the long patterns, as Steven said, and get short patterns out of there. You know what I say, the bear jumps out the window while the bull climbs up the stairs. It's a whole different mentality. So please understand, you don't want to take these patterns and try to reverse them. It just doesn't work that way, right, Steven?
Right. Yeah. I mean, you definitely, don't want to just kind of blindly try to flip it upside down. You do have to have different rules for that. So, yeah, yes, you are correct. So I got a question that says, can you just purchase the option plan separately? Honestly, the option plan is also 497 if you purchase it separately. So, yeah, yeah. I mean, you can purchase it separately without all this, but you're gonna be but purchasing it for 497 as well. I threw this in as a special bonus. And by the way, the fast track workshop right here, I individually sell this for 497, and I did that just a few weeks ago. So I threw in some major bonuses for you guys. I charge 497 for these separately each, and I put this all together in a really a no-brainer package for you.
And the scoop is why, the options is a tool in the tool chest, but the pattern is what the key is, right? Being able to identify the pattern. So having just the options piece in my mind is like missing a big piece of the overall, guidance that you're giving.
Yeah, absolutely. You're still going to follow the pattern. You're still going to trade the system. And then I just tell you, basically, I'm really showing you which options to buy and how to trade that. So you still have to know the system. Helena, I am looking. You are one of the first 20. So I have somebody asking, definitely getting some sales come through. Helena, you are one of the first 20. So you're good to go on that.
By the way, Helena is rad.
Is Helena rad?
Yeah, she's rad. She's one of our good. She's been a long time trading trainer. This is going to be a perfect complement to what we do in our program. I think you're going to really like this stuff that Steven's showing you. It's going to be helping you do those different types of trades that, when our symbols do different patterns, this is how you're going to take advantage of it. I love it.
Yeah, absolutely. Well, Helen, I look forward to working with you and everybody else. I'm seeing those orders come through. Really look forward to working with you guys. I mean, you should get your logins pretty quickly, usually within 15 or 20 minutes or so. But if you have any questions, you can always just email me directly at Steven, Steven, at thetradersplan.com. That's also on the order form. So any other questions? I think I can sit here and answer some more questions. I think I've answered them very generous. Oh, thanks, David. Absolutely. I like to think it's generous.
Mm. Yeah, just one more time for you folks out there, if you're on the fence, you guys might know that I very rarely have been, letting other folks come and talk to my group. I like, there's some folks around trading emotions, but Steven's been trading these patterns for I don't know how long, very long time. And I love anybody who comes at investing by identifying patterns and then applying the tools to them, and very rules based, very, and if he fills in a gap to my program, that's even better. And so I just want to put it out there again. I saw Steven give this almost exact presentation not that long ago, and he's giving us a deal. So I hope you guys, if you're thinking about it, you realize you should take advantage of it. If not for anything, that he severely discounted this bundle that he's offering.
Uh, Someone's asking if there's any fib training in there. No, I don't have any Fibonacci training.
What, you don't believe in magic?
I just there's so many ways to interpret it, and that's where you talk about discretion, AJ. And
Yeah,
I really do my best to kind of stay away from that discretion.
yeah.
And I think most people just it's very hard to make money being just a pure discretionary trader. You can make money in certain markets, but being consistent. You
Is
know,
another story.
it's just a completely other story. So no, I don't Fibonacci trade personally. I like
Yeah.
price and volume and rules.
Yeah, exactly. I'm with you on that. I use the Fibonacci's as simply a ruler to measure retracements. I don't believe in any of the woo-woo behind, this is a magical pattern that exists in nature and it also exists in the stock market. So let's make sure. No, I like to use it because I know that statistically these numbers create different sorts of trades. But man, there's some woo-woo out there, some of these different like Elliott wave patterns and things like
Yeah,
that. I'm just like, boy, that's a lot of magic, huh? And I don't believe that there's magic in the markets. I believe that it's pretty much just human psychology.
it is all human psychology. I would
Identify the pattern and then trade it accordingly.
absolutely 100%. So, um, what did somebody ask? Does this renew automatically? No, it actually doesn't. This does not renew automatically. I'll probably send you an email as it gets, close to the end of your subscription to see, see if you do want to renew, but it's not an automatic thing. That's a fair question. Yeah, just watch the replay. I got someone saying they didn't catch the rules part, the plan building. Just watch the replay. I'm sure AJ will send that out.
You betcha.
Okay, so we got that. I think we're good. Does anybody have any last questions? I know it's late where some people are. I know it's late for me, but I love doing this and any chance I get to talk to people and educate people. Um,
While you're
I-
looking at the questions, I just want to remind everybody that if you haven't clicked on over to his order form and looked at the details of his order page, just take a look at the webinar control panel and you'll see that I entered in the link that you can just click on thetradersplan.com/trading trainer. You can just click on it in the chat area of this.
yeah, and honestly, not even all these bonuses are on the order form, but I promise everything you see on my screen right here you will get because I just wanted to do something good, for your audience, and I kind of threw some things on here that I don't normally do, but um,
Yeah, I appreciate that.
yeah, absolutely. So
And I'm
love to
excited
send.
to have you back on it. We had, if you guys didn't catch it, on my weekly YouTube show, we'll be on again tomorrow at 11 a.m. Eastern Time, 8 a.m. Pacific Time. But we had Steven on last week, and we're going to start featuring Steven more often. So kind of excited to have him giving his 2 cents on our YouTube show.
Yeah, no, that was fun. I had a really good time doing that. That was a lot of fun, and well, let's definitely do that again.
Good.
So I think okay, yeah, David, I appreciate that. I'm looking at several. Yeah, there's a lot of Davids in the house. A lot of Davids in the house. A lot of Davids signed up, so that's kind of cool. Um, David said, "I'm a member, but I signed up for the bonuses." That's awesome. Thank you, Steven. Love the simplicity of your trade plan. You bet. All right. Looking forward to working with everybody. AJ, it's been an absolute pleasure. We're going to keep working together. So I will talk and see you very soon.
All right. Thanks, everybody. I'm going to leave. Can you leave your slide up and we'll just leave it up for about maybe 10 more minutes?
Absolutely.
All right. Thanks, everybody. Have a good rest of your evening. Take care.